We're starting with you chapter 10, which talks about property, plant, and equipment in particular. And this video is on learning objective 1. So we will be looking at how to account for plant asset expenditures. It's an unusual word for you guys, expenditures. Okay, so what is plant asset expenditures? Plant assets are resources that have physical substance. So that's to take them away from intangible assets that don't have physical substance. They're used in operations of business, otherwise they will look like investments, and they're not intended for sale. So this one takes them away from inventory. So you have 3 different categories that we take them away from, which is intangibles, investments, and inventory. And they're also expected to be used in the company for a number of years. So these are long-term assets. They're not supplies that will be wearing out much faster. A lot of times you will hear, we call them property, plant, and equipment, or PPE, plant and equipment, or fixed assets. These are all the same things. Okay, so the first thing is, before you even make a journal entry, you have to know what is the cost of a plant asset. And we will be following the historical cost principles. If you remember, historical cost is not the same as fair market value. Fair market value is what this plant asset could be sold at today. And cost consists of all the expenditures necessary to acquire an asset and make it ready for its intended use. So every time you will be looking at a potential cost item, so basically you spend the money, that's your cost. You'll have to decide, will it be cost of this asset? Will it become part of my asset? Or is it something else? Okay, we will be looking through several particular categories. The first one is land. So all, again, necessary cost incurred to get that land ready for the intended use. Costs typically will include cash purchase price, that's the easiest one. But then you also have closing costs such as title and attorney fees. You'll have real estate broker's commission, so you might be paying 7% on top of that, or whatever commission could be. Then you could also have accrued property taxes. So what does it mean? Property taxes are usually very much in arrears. So for example, I could be a property owner in the year 2000, but property taxes are due in the year 2001. So if I were to sell that land to somebody, they might be assuming my property taxes. If we negotiate it that way, then those property taxes that the buyer actually pays will become cost of land. Or it could be other liens on land that are assumed by the purchaser. So again, your assumption is, could you buy this land without paying for these items? If the answer is no, then most likely it's considered to be necessary cost to get that land. Okay, so here example for you. His company acquired real estate at cash cost of 100. So check mark, that's cost of land. Oh, the property contains also an old warehouse that is raised at the net cost of 6,000. See how they worded it, net cost of 6,000. 7,500 was in cost, but then we had proceeds from that salvage material. So your net cost will be $6,000. Cost of removing the warehouse is actually becoming the cost of your land. Why? Without removal, you cannot use the land. Additional expenditures such as attorney fees, real estate broker commissions is also added. So your overall cost of land will be actually $115,000. So you might be stapling all these documents together and say land plot number such and such, so that becomes a specific asset for your company. Okay, not to be confused, we also have land improvements. Land improvements are structural additions that have limited life made to land. So for example, it's driveways, your parking lot, fences, landscaping, and underground sprinklers. Why are they different? If you remember, land has unlimited or indefinite useful life, and these assets will have limited useful lives. So your drivers get out of shape, your fences fall apart. So that's why we have to account for them separately from land. And therefore, you can or you should expense or depreciate cost of such land improvements over the useful life. Depreciation will be discussed in the next learning objective. And again, historical cost principle, any expenditure that is necessary to get this land improvement for the intended. For example, well, here's another one, the third one, buildings. Includes all the necessary costs related directly to purchase or construction. And I go through the two separately. Purchase, very similar to land. So it will be purchase price, closing costs such as attorney fees, title insurance, etc., broker's commission. But then if you need to do any necessary remodeling or replacing to repair roof or floors, or maybe you need to update the electrical because wiring is old, or maybe plumbing, these are all considered to be necessary expenditures to acquire the building. We can also construct a brand new asset. So what will that be? Contract price, payments for architect's fees, or maybe building permits or excavation costs, etc. So all these, actually even interest, if you were to take a loan out, interest as you are building, only during the building construction, will become not interest expense, but rather cost of that building. Once you open the building, then it's considered to be interest expense after that. And the last big category will be equipment. Equipment, again, all costs incurred in acquiring the equipment and preparing for the use. Typical cash purchase price, this one is easier. Sales tax. You cannot take equipment down to your parking lot without paying that. Freight charges to deliver equipment. So if I have to bring something from California down to Midwest, I will have to incur freight charges. That's not freight expense. That actually becomes cost of your equipment. Insurance during transit paid by the purchaser. So if I'm bringing something from California, I decided to insure it while on the road only. I'm not talking about that first year of auto insurance that you might be paying, but insurance during the transit. That's considered to be part of cost. And then assembling, installing, testing, maybe calibrating for a scale, all of this considered to be, again, cost of the asset. Okay, so for example, a lender company purchased a delivery truck, cash price is $22, that's an easy one. Sales tax also included. You've got painting and lettering, so if we have to put maybe the name of the city, the name of the college on the side, that's considered to be also necessary expenditures. Motor vehicle license, no. Why not? Because this is an annual expense you have to pay. That's why it's an expense. It's an annual usual repair and maintenance. 3-year accident insurance policy. Well, it's a 3-year accident insurance policy, not during transit, but it's actually your prepaid insurance. So it will look like this. Equipment and $23,820. You've got license expense for $80, and then prepaid insurance for $1,600. In total cost, total cash for everything that we just paid. And then I also would like to get your attention to a particular area that also relates to cost of plant assets, not necessarily as you're buying it, but down the road. You could, every time basically you spend money or incur an expenditure to repair an asset, you can either count it as an ordinary repair, so something to maintain operating efficiency or productive life of a unit, and those are referred as revenue expenditures. So what do you do with it? It goes as a debit to maintenance and repair expense, and then credit cash or whatever it is. However, you might have large expenditures that will either increase operating efficiency, such as you replaced a furnace. It used to be 75% efficient, now it's 95. So cost of that furnace will be added to the cost of your building. So it becomes cost of your building. It's not your repair and maintenance. Or productive capacity. Think of addition to a building, for example, or useful life of plant assets, such as you replaced the roof, or maybe you replaced an engine on a car, or maybe a transmission. In this case, you will debit plant asset that is affected. So see the difference, expense versus it becomes your plant assets or assets in general. And those are referred as capital expenditures. This is actually a big area for fraud. Some of very large fraud in history have been done in this area in particular, and that's where auditors come in, and we're looking at this particular areas with greater concern.